Well, I'm here with Mr. Zane Collins with Keller Williams. He has been a realtor for quite some time, tons of experience. My favorite guy. He's my go-to guy when I'm buying or selling properties here in the Austin area. So thanks for meeting us, Zane. And yeah, love to have you on.
Yeah. Thanks for having me. Um, yeah, like you mentioned, Ryan, I've with Keller Williams. I've been in the business since 2010. Yeah, that's 13 years. Um, and we've built a really nice like big team. We sell probably about 100 homes a year right now is where we're averaging. That's our sweet spot. And primarily focused here in the Austin area. We've started to grow south towards San Antonio. But that's just, yeah, my background in real estate, fundamentally what things look like right now.
Cool. Do you mind if I ask, like, why did you decide to become a realtor and get into this business at all?
uh, Happenstance. It was the first job I ever had. So I moved to Austin when I was 18, and that was 2010. And I needed a job, and there was somebody that was hiring somebody like a student to put out signs and lock boxes on homes that she had for sale. So that was literally my intro into it. It was probably October of my first semester here. So I'd only been here for 2 or 3 months. And yeah, I just got into it, and I realized when it was time to graduate college, like, okay, cool, I can take this economics degree and I can go to graduate school and pay for that, or go take probably an entry level 30-ish, $40,000 a year job, or I can stay in real estate and like I can probably have a lot of success given what I already know, like, and who I'm partnered with. Like, I can get where I want to go a lot faster than if I went back to school or wanted to go into some corporate role. And so that's what did it. She extended an offer to like be an agent with her, and I took it.
Yeah. Yeah, it doesn't
Yeah,
take a PhD to become extremely successful in real estate, and you're proof
no,
of that right here. So
not
awesome.
at all.
Well, I'm curious because we've known each other for a long time, and not only are you an agent where you buy and sell properties, you also buy them for yourself as investments. So I'd be curious
Yeah.
in your experience, buying your own real estate.
Yeah. So I bought my first property, and it was a fourplex, and I think that was in 2016 or 2017. Um, and definitely a lot of learning. Got to be the direct beneficiary of what happens when you purchase an older property versus like maybe what a newer one, like the maintenance that comes along with that. Um, but yeah, so I bought that fourplex. That was in 2017, and I think since then we've I've purchased. I'm trying to think here. I think between everything we have like 8 properties, between Central Texas, and then between Central Texas, San Antonio, and Dallas Fort Worth area. I think it's at 8 now. And so all of those, like to your point, been the principal on, and manage them myself, all of them still. And it hasn't been too chaotic, other than the one property that needed a lot of maintenance. But yeah, it's been really interesting. And yeah, real estate is an asset class that I know really, really well. And I just regret not investing in it sooner. I regret trying to play the crypto game and the stock game instead of just getting into the real estate game, like, and actually participating as an investor.
Yeah, I'd be curious to know before you got into each of these investment stocks, crypto and real estate, what did you expect to have happen, and did they perform as you expected, better, worse?
Yeah. So I probably started investing in the stock market itself when I was in college. And I've always been self-employed. Even like in college, I was a 1099 contractor, and I had to pay quarterly taxes. And it just killed me to have to put my money that I'd set aside for quarterly taxes in a savings account that was earning 0.01%. Well, I guess, like, there is security in that 0.01% because I started investing that money in the market, like trying to just make a little money in between tax time, like in between quarters. Did not go well for me. Um, in fact, lost a lot of money doing that. And so probably in 2014 or 2015, I started thinking, okay, like, why am I trying to play this game of risk in the stock market? Like, I literally sell real estate, and I know it well, and I know what a good buy is. Like, why am I not doing this myself? And I kept coming up with all these reasons. Oh, the down payment. Okay, use an FHA loan. Oh, nobody wants an FHA loan. Like, it's going to be hard to like buy something with an FHA loan. And that's just not true. I mean, yeah, I guess it is harder, but it's not impossible. It's not impossible at all. And so I guess the success that came with owning real estate, all of the tax benefits that came along with it, because that's what I do. I'm in real estate, and so realizing all of that, it's become a no brainer. Like, growing my wealth and my family's wealth through real estate, like that was the key. That was the key for sure.
Yeah. Have you ever put like pencil to paper of like, hey, I invested, X amount of dollars and here's been my return on my investment so far? I don't know if you've ever thought about it like that.
I have. There are a couple really good examples. The FHA deal that I bought, like that very first deal, that was a property that I purchased, and day one it was like cash flow positive, which was great, and it had a lot of maintenance, like I mentioned earlier. I couldn't tell you the percentage return like right now, but that property has more than doubled in value since I acquired it. And then I have the property in Dallas. Like Dallas, there's still so many deals in the DFW area to be had where you can buy single family homes in certain pockets or certain areas of the Metroplex for, $150,000. And you could 2 years ago, 3 years ago, very easily. And some of those have doubled in value. So, I don't know. It's been really interesting to watch that, and also the rent growth, and how like the rent, the spread between rent growth and like the asset value, and how rent has really started to pick up, and the asset value is definitely not, it's not increasing as much as it was. But yeah, we've definitely seen money double here in Austin, and we've seen money double up in Dallas.
Yeah. Yeah. And you manage some of these yourselves. Do you ever use property managers?
So I have a property management company. Uh, and I think like me managing properties was probably what got that started more than anything. I have not used a property manager separately. Sometimes I've wanted to, but having the ability to like interact with the tenants directly before you sign them on, having more strict credit requirements and income requirements has kind of allowed us to vet out and weed out a lot of the folks maybe we wouldn't want. But yeah, I've managed all of them myself to date.
Okay. And do you have anybody helping you with the management, or is it just you?
I have a business partner on my real estate team that helps with the management. Right now, it hasn't been too chaotic, but we'll probably be bringing on some leverage here in the next 6 months or so.
Sure, sure. And if you were to put
Yeah.
an idea of how much time you spend on the management side versus on the commission realtor side.
Oh gosh. I mean, now I feel like I'm in such a sweet spot, but it took a long time to get to the sweet spot of collecting rent. You know, uh, Probably whenever I got started, the management, because some of the deferred maintenance on these properties, like the amount of time invested, easily 10 to 20 hours a week for a good year was spent on at least two properties, because they needed a lot of work. I mean, now it's super easy. Now there's maybe an hour or two a month that gets spent on properties. But yeah, at the beginning, it was a lot.
Okay. Yeah, but it sounds like it took a
Yeah,
while to develop some systems, but now that you have them,
yeah,
the systems really work. So yeah,
yeah.
that's
That's right.
yeah. Okay. So you came on board as one of our investors in our deal in San Antonio, the 75 unit
Hmm.
next to urban living. It's a property that's kind of right down the fairway for what we like to do, buy our older properties that are mismanaged, do some renovations and do some improvements to the systems and then make them profitable and then eventually sell them and have them become pretty good investments as passive investments for people like you. So what was your thought process into starting to look into this as a type of investment?
Well, first, I think like you having a relationship with the principal on the deal was a big part of it, but the catalyst was diversification, right? You think about, you know, a fourplex is still residential real estate. We call it multifamily; it's residential real estate, and the same for single family homes. And so I think a big part of this was being able to just like get an eye into how do you put together a deal like that. Um, all the documentation that came beforehand, like it was like a prospectus, I think. Like it was so informative, and like it was so impressive, like to see how all this is put together. And it allowed me to get diversification with a pretty minimal amount of money, and into a different type of real estate where I can learn and I can be in the audience and I can watch, and I'm not holding anybody back. I'm not being a drag. I'm just observing. And I think that was really what was compelling to me about this. Is it was an opportunity for me to learn a little bit more about apartments and syndication, and I can do it pretty passively, like as much or as little as I want. And that was a big driver for me. Also, tax benefits. Again, like that's part of it too. But being able to do all of that with, a fairly minimal amount of money on the size of that deal, that was really cool.
Very cool. Yeah. So if you were to try to quantify, like as far as time commitment, effort, energy, and then also profit of how much you think you'll make on this deal compared with your other investments, where does the two types of investments kind of come in at?
I would probably make my highest dollar per hour on this Nexus deal because of like the involvement. I mean, I've literally, it's like reading, it's reading. My time commitment has been so far reading. Also, I felt like the underwriting was pretty conservative, not like a lot of what we see other projects written up as. And so, I guess it's hard for me to say just getting into to like quantify right now, but I can say that the amount of time invested, and what I see, all the work that's being done and the updates that I get. Let's see, I got a fourth quarter update. I just got the first quarter update the other day. And like seeing everything that's going on and the rebranding and the updates, and like taking something that's, that needs love and that needs help, and making it into something really nice. Like, I'm excited to see that. I'm excited to see the growth. And I really do think that there's going to be a big opportunity. I think San Antonio is a pretty darn vibrant market. I think there's a lot of growth potential there. And I think the way that it was underwritten, the things that were shown to me, like being so conservative, there's a lot of room here to blow those expectations that were presented out of the water. So I'm excited to see that.
Awesome. Yeah, me too. I think it'd be a great project, and I'm excited that we're getting to work on it together. So
Yeah.
all of these things considered, you have a unique perspective because you have your own properties that you own and manage yourself, and then you're also doing this one passively. So if there were other realtors or potential people who wanted to consider investments like this, would you say it's probably better for people to get into the single family buy, manage yourself, or get into something like this? Who would be a good fit for each type of investment?
Yeah, that's a good question. I think it helped me, like, since this was not my first investment, there are minimum investment thresholds, right? Like you have to put in a certain dollar amount. And so doing that on other transactions and knowing, like, trust the process, and also trusting who you work with, like, and who you're placing money with, like looking at their results on past projects. That's a big part of it too. Um, you know, so if there's, if you have a relationship, I think that really does make a difference. I will say, like, for me, it helped me a lot having been through this, like, and understanding what it takes to manage a property and what it takes to maintain a property. That helped me a lot in moving forward with this. So I probably needed it. But if I was more of the investor, like, I'm going to go put this in I bonds, or I'm going to go put my money in bonds. Like, no, like, honestly, I feel like something like this makes more sense, especially if you're already in real estate. Like, this is a no brainer if you're already in real estate and you're looking for somewhere to park your money.
Cool. Awesome.
Yeah.
Well, that's pretty much all the questions I had. I mean, is there anything else you want to say or comment on?
No, I think this is so cool. I've had so many questions from the agents that I work with about these types of deals. And in fact, my business partner, that helps me manage properties, like, this is his goal. Like, his goal is to get into a deal like this. And so being able to, like, just provide a little insight to him, was super helpful. But it's just exciting. Like, it's something totally different from what we do in residential real estate. And, yeah, it's really cool to be a part of something that's this big.